After a slight retreat last week in the gold demand during the festivities, the consumption of Indian gold is headed for a nosedive. According to a recent report by the World Gold Council, the demand of gold in India is likely to drop by 8% to 700 tons, lowest since 2016. Nation's cumulative gold demand declined by over 27 tons from 523.9 tons during the first 9 months of 2019, as opposed to the same period last year. The 2018 full-year gold demand stood at 760.4 tons. The fall in consumption of the precious metal in the world's second biggest market is attributed to sharp rise in its price. The precious metal saw a surge in prices by 20% towards the end of Q2 and in Q3. Now let us discuss the top reasons for this fallout. Escalating US-China trade disputes is the key reason for the sudden spike in the prices. Along with rise in prices, the weak spending sentiment in the country is also hurting gold demand. However, decline in India's gold demand came in sharp contrast with global demand, which saw a notable rise. Nevertheless, this fall in demand can act a breather for the Indian economy, as the import figures of gold in India are much higher than the exports. The net import of gold and precious stones amounted to about $5 billion. Many experts feel that a decline in gold imports will arrest the flight of capital, current account deficit, and strengthen the domestic currency. Another reason for lower imports is that the domestic gold market went into a deep discount due to poor demand in Q3. Gold was sold at a discount up to $45 per ounce, but the rate later came down to $2 per ounce during Diwali. Keeping these factors in mind, how good an investment gold is and what is the outlook for the year ahead.
When prices go up, there is a general trend that people do try to cash in. And when you mix it with the fall in the sentiment and some parts of the rural areas getting affected because of low wages or whatever, certainly this trend is to be expected. And this is not just an Indian phenomenon, we have seen it globally as well. The recycling has really gone up by 10%. Because people do tend to take advantage of high prices to exit gold. At quarter 2 of 2016, there was a jeweler strike following introduction of excise duty. And you saw jewelers completely shut shop for nearly 45 days. And that quarter was one of the lowest, actually, quarter 2. But this is the next lowest quarter in the last 15 years. We see that millennials certainly have other choices now. Holidays, experiences is globally now becoming a more important expenditure for millennials than buying these material stuff like a gold or even a car. Above 35, they do tend to come back to gold. Maybe this is therefore a phase in their life when they wouldn't want to look at gold, but maybe they would come back at 35. If you're talking about 200 million people joining the middle class in the next 5 years, 1 gram per person means a 200 ton of latent demand there. So we need to look at the Indian market slightly differently. Our per capita, despite our very large consumption, is one of the lowest. We have done an econometric analysis last year. What we found is gold demand in India is more influenced by income than any other factors. By that what we mean is a long-term increase of 1% in income leads to an increase of 1% in demand. But an increase of 1% in price leads to a drop of 0.5% in demand. So that shows that the income has a greater influence on long-term demand. So this means that as India gets more prosperous and our per capita increases, you will see the latent demand for gold from sections who haven't had access coming back in a big way. So in a sense, gold is therefore protected because quite a lot haven't had access to gold. But you will not see people moving away from gold. At the end of the day, it is a very, very good asset class. It is inversely connected with the other asset classes. It will always remain in fashion.
So make your gold buying decision wisely, and for more updates, keep watching the space.